Welcome back to Investing Talk Podcast. Today we're doing a deep dive into Delta Airlines. Using the material you've shared with us, our mission really is to cut through some of the noise and unpack the most important insights about Delta's recent performance, its financial health, how it stacks up against the competition, and what the future might hold. The airline sector has definitely seen some turbulence lately, that's for sure. And by going through these details, we can hopefully get a better handle on what's specifically going on with Delta right now. Before we jump in, if you find this helpful, please do consider subscribing, liking, and maybe leaving a comment. Your support really helps us keep bringing you these deep dives. And if you feel like supporting us even more, you can always consider buying us a coffee. The link's usually in the description. Okay, so let's set the scene. Who is Delta Airlines, broadly speaking, and how have they been performing recently?
Well, Delta is, a major global airline. They operate a really extensive network serving, I think it's over 350 destinations worldwide. They're quite well known for their focus on premium service, which does differentiate them from some others. They've got significant hubs in key cities across the U.S., Atlanta, New York, L.A., and also internationally, places like London, Paris, Tokyo. And their global partnerships, think Air France, KLM, Virgin Atlantic, those really expand their reach quite dramatically.
So a massive player, wide footprint. How's that translated into their stock performance lately? Because the charts look, well, interesting.
They certainly do. Looking at recent trends, the stock price has shown, I'd say, moderate volatility. It's generally been trending sideways lately. Investors seem to be grappling with the broader market uncertainty. Now, if you look back over the past 6 months, there was some upward momentum. That was particularly after they reported pretty strong results for the fourth quarter of 2024.
Right. But I noticed, looking over the full year leading up to, say, June 2025, they actually outperformed many of their peers. Is that correct?
Well, that is correct, yeah. They did outperform many other airlines over the past year. But even within that period, there was volatility. A lot of that was driven by macroeconomic uncertainty just hanging over the entire sector. What stands out more recently, though, is their year-to-date performance. As of June 2025, shares are down pretty significantly, about 18.29%. And there was even a specific note about a daily drop, 4.86% on June 11th. So definitely noticeable recent pressure on the stock.
That recent drop does sound significant. What specific events or results have been shaping this Delta story lately?
A few key things stand out. They reported a record December quarter profit back in January 2025. That initially boosted sentiment quite a bit. Then their March quarter results for 2025 came in. They were solid, but importantly, they were flat compared to the same quarter the prior year. And management attributed this flatness directly to, slower economic growth. Another notable signal, though you have to view it in the current climate, was the declaration of a quarterly dividend back in April 2025, which just got paid out in June. That was generally seen as a sign of confidence in their cash flow stability.
Okay, so we've got this picture. Strong past performance, especially versus peers, but mixed with these recent headwinds and a kind of flat-ish first quarter. Let's really dig into the financial numbers now, both for the full year 2024 and that more recent Q1 2025.
Absolutely, let's do that. For the full fiscal year 2024, Delta reported revenue of $61.64 billion. Now, that's up a healthy 6.19% year over year. It shows that strong post-pandemic rebound was still definitely in effect. However, it's also clear this growth has moderated in the more recent quarters, precisely because of those macroeconomic headwinds and slower global expansion we mentioned.
And profitability, how did that look for the full year, net income specifically?
Right. Net income for FY 2024 came in at $3.46 billion. What's quite interesting here is that this was actually down from $4.61 billion in FY 2023. And that's despite their operating income being higher at $6 billion. So this suggests there was likely some pressure on margins or maybe increased costs hitting the bottom line somewhere below that operating profit level in 2024.
Interesting. So more revenue, but less net profit year over year.
Right.
For an airline, cash flow is just absolutely critical. How did they fare there?
Operating cash flow for FY 2024 was robust, came in at $8 billion. And their free cash flow, FCF, the cash left after paying for operations and capital expenditures, essentially cash they can use for debt reduction, dividends, buybacks, things like that, stood at $3.4 billion for the year. It's emphasized that this is, significantly positive cash generation.
And debt, that's often a big number for airlines, right?
It is, yes. Total debt at the end of FY 2024 was $22.77 billion. But here's where it gets interesting on the debt side. Their trailing 12 months debt to EBITDA ratio actually improved. It came down to 2.48 times. That's a key metric showing how well they can cover their debt with earnings. And that improvement indicates they've made solid progress on deleveraging since those pandemic highs. That's a positive sign for financial stability.
Okay, good. Moving to the more recent snapshot then, Q1 2025.
Yeah.
What did that show?
Right. Q1 2025 saw operating revenue of $14.0 billion and operating income of $569 million. That works out to about a 4% operating margin. Now, this was described as delivering industry-leading profitability despite challenging conditions, which I think is a crucial point about their execution.
That ability to stay profitable even when things get tough seems really important in this sector. What about the look ahead, based on the guidance they gave earlier in the year?
Okay, so based on guidance they provided back in January 2025, the projected earnings per share growth rate, the EPS CAGR, over the next few years is estimated at nearly 10%, 9.94% specifically. For the full fiscal year 2025, they projected earnings greater than $7.35 per share. And significantly, they projected free cash flow to exceed $4 billion in FY 2025.
Exceeding $4 billion in free cash flow. That sounds like a pretty big jump from the $3.4 billion in FY24. What does that signal?
It is a big jump. It represents roughly a 17% increase over the prior year's FCF. This is seen as a strong sign of robust financial health and cash generation capability, even if that top-line revenue growth is moderating. Generating that much cash gives them a lot of flexibility.
Yeah, let's talk valuation then.
Yeah.
How do these financial numbers look compared to where the stock's trading right now? Any metrics stand out?
Well, the trailing 12 months price to earnings ratio, the PE, is noted as 8.72 times earnings. The PE ratio basically tells you how much investors are willing to pay for each dollar of the company's profit over the past year. And this 8.72x is compared to the historical airline industry average, which typically runs, somewhere between 10 and 15 times. So this comparison might suggest that based purely on its earnings outlook and historical context, Delta could be undervalued relative to its historical peer group. But of course, we need to factor in the risks, too.
Right, always risks. And the dividend reinstatement you mentioned.
Yes. The quarterly dividend was reinstated at $0.15 per share. The payout ratio is noted around 9.73%. That's relatively low, but it does signal that consistent payouts have resumed after the COVID disruptions, giving some return back to shareholders. While we don't have exact current price to book or beta figures here, it's worth remembering those are standard metrics investors look at for airlines. PB is typically less than 2 times for airlines, and beta, measuring volatility relative to the market, is usually above 1 due to that cyclical nature.
Okay, so financially, they seem to be generating strong cash flow, deleveraging, and maybe look potentially undervalued on a historical PE basis, even as near-term growth slows. Given that internal picture, how do they actually stack up against their competitors in the market?
That's the logical next question, definitely. Several strengths contribute to Delta's competitive position. They have a strong premium brand reputation, service quality, reliability, which helps them capture those higher margin travelers, both business and leisure. Their international network, particularly the premium segments, has shown resilience. It actually outperformed domestic travel in early 2025. They've also demonstrated strong cost discipline. Things like active capacity management, which helps protect those margins and maintain their cash flow leadership position.
And operational performance seems like a key differentiator, too, based on what you said earlier.
Absolutely. They received awards, J.D. Power, Wall Street Journal, for operational performance and customer satisfaction in 2024-2025. That reliability really matters to customers, especially premium ones. Combine that with their strong strategic alliances that expand their global reach, and these operational and service advantages definitely help them compete effectively.
So where do they stand specifically among the big U.S. carriers?
Well, they're clearly positioned as a market leader among the U.S.-based legacy carriers, particularly when you look at profitability metrics. They continue to lead industry profitability, even as the overall sector growth has kind of stalled due to those macroeconomic factors we keep circling back to. Compared to peers like American or United, Delta has shown higher recent profitability margins. And importantly, they have lower leverage than pre-pandemic levels, thanks to those debt reduction efforts.
So while they seem to be executing well internally and are positioned strongly against peers, the broader industry is facing some pretty significant headwinds. What are the key trends and risks impacting Delta right now?
Yeah, there are several, and they're significant. Slower global economic expansion is definitely a big one. It directly impacts demand for travel, especially the corporate and international segments. Persistent trade tensions, particularly U.S.-China, affect international routes and can also disrupt supply chains, which airlines rely on. There are ongoing regulatory risks, things related to emissions, environmental standards, which could mean increased costs down the line. Elevated fuel prices remain a constant pressure point across the entire industry, always squeezing margins. Supply chain disruptions are still a thing, affecting aircraft deliveries, availability of maintenance parts that can impact operations and growth plans. And then there's just general macroeconomic uncertainty, which dampens forward visibility for pretty much everyone in the sector.
And you also mentioned specific concerns about weakening domestic travel demand in early to mid-2025.
That's right. And in response to that, you're seeing industry-wide capacity adjustments. Airlines like Delta are trying to match capacity to these softer demand projections, particularly looking at the second half of 2025. For example, Delta reduced its planned capacity growth essentially to flat compared to the prior year. That's a conservative move intended to protect pricing and profitability in a weaker environment.
Let's take a moment just to touch on the leadership. Who's at the helm and how are they perceived in terms of navigating all this?
Ed Bastian is the CEO as of June 2025. His tenure is specifically noted for effective crisis management, particularly navigating through the COVID recovery. Also, successful cost controls, repairing the balance sheet post-pandemic, and consistently delivering against the guidance they've provided, even in these volatile times. The executive team overall is credited with demonstrating operational resilience, that disciplined capacity planning we just talked about, like the decision to go flat, a sharp focus on those high-margin premium segments, and prudent capital allocation, using that cash flow effectively. And importantly, no major scandals or governance controversies were flagged recently, suggesting a stable leadership picture.
So a seemingly solid leadership team dealing with a very challenging external environment. Okay, let's try to pull everything together now. We've talked financials, competitive strengths, industry headwinds. What are the absolute key risks weighing on the stock price right now? What's the market sentiment like, and what's really driving that recent dip we discussed?
Okay, consolidating the key risks. First, softening travel demand due to economic uncertainty. That's probably number one. Then, those persistent high fuel costs, ongoing supply chain issues impacting operations, and trade tensions affecting international travel. It's also pointed out that the lack of updated full-year guidance from management is itself a reflection of this uncertainty, and the market often reacts negatively to that lack of visibility.
And that recent stock price decline has definitely brought up valuation concerns for some analysts.
It has, yes. With the stock significantly off its recent highs, some analysts are quoted as estimating a fair value closer to $33.40 per share based on June 2025 data. This implies that even after the dip, they still see potential overvaluation at current rating levels based on their model. So a bit of caution there on valuation from some corners.
What's the overall market sentiment surrounding Delta right now? Is it doom and gloom or?
It's described more as cautious optimism. Analyst sentiment seems to remain generally positive. They acknowledge Delta's operational leadership and its, perceived valuation discount based on earnings potential, but they are very aware of the risks from weaker demand. On social media, the chatter reflects anxiety about short-term prospects, but there's also still some optimism about the long-term fundamentals, partly because of management's conservative, disciplined approach, like those flat capacity plans. There's definitely a visible debate among investors right now. Is this recent dip an opportunity to buy into a leader, or is it a warning sign of more pain to come for the sector?
Based on what we've discussed, what are the specific factors driving that recent stock price decline? Is it Delta specific or broader?
It seems to be a mix, but heavily weighted towards broader factors. It's partly that general airline sector weakness, driven by the softening domestic travel demand. It's also tied to the general economic uncertainty impacting consumer discretionary spending. Travel is often one of the first things people cut back on when budgets get tight. And those persistent operational challenges, like high fuel prices, continue to pressure margins across the whole industry, impacting sentiment even for the strongest players like Delta. So, despite their relatively strong underlying financials, these external sector-wide pressures are clearly weighing heavily on the stock price.
Okay, so looking ahead then, what potential catalysts could change this picture, maybe turn things around, and what are the biggest ongoing risks to the outlook?
An upcoming catalyst is definitely the June quarter earnings report. That should be coming out probably July or August. That report will provide crucial clarity on whether travel demand stabilized or maybe even started to rebound in the second quarter. That's what people will be watching very closely. Ongoing risks to the outlook include the possibility that the economic slowdown and those trade tensions persist or even worsen, continuing to suppress corporate and international travel demand into the latter half of 2025. And of course, regulatory changes or unexpected fuel price spikes could always pop up and pressure margins further.
How does Delta's management frame things? How do they see things playing out in this environment?
Well, management expects to maintain their industry leadership position. They seem confident in their strategic approach and their execution. However, they are clearly tempering those near-term expectations, specifically because of those external uncertainties they just can't control. They seem focused on managing what they can control: costs, capacity, premium service, the balance sheet.
So, after sifting through all this material, looking at the numbers, the competition, the risks, what's the summary recommendation that emerges?
The summary recommendation presented is simply hold.
A hold? Okay. And the rationale behind that, why not a buy or sell?
The rationale is basically this. Delta is fundamentally strong. They have industry-leading operations, and importantly, that robust projected free cash flow generation. Remember that expected 17% year-over-year increase for FY 2025. Those are significant positives. They point to a healthy core business. However, the significant macroeconomic headwinds introduce meaningful uncertainty regarding their near-term revenue and earnings potential upside. It clouds the picture. This uncertainty is why management decided not to issue updated full-year guidance. There's just too much they can't predict right now about the external environment.
So the internal picture looks pretty good, strong operations, good cash flow, but the external storm creates enough uncertainty that it kind of outweighs the positives for a more aggressive recommendation like a buy right now.
That seems to be the thinking, yes. Investors might want to wait for greater clarity. Clarity on those consumer and corporate travel trends and just broader economic conditions before considering adding more exposure at current levels. It's best viewed as a hold pending improved visibility into that wider market and economic situation.
So what does this all mean? It sounds like Delta shows strong underlying financial health, clear competitive advantages, especially when you look at profitability and that free cash flow, particularly relative to their peers.
That's a very fair assessment, I think. The internal health of the company, based on these numbers and their operational track record, seems pretty solid.
But here's where it gets really interesting. Despite those internal strengths, the stock price has been significantly impacted by these external macroeconomic factors and sector-wide concerns that are largely, beyond the company's direct control.
It really highlights how even a well-managed company, one with solid fundamentals, can be heavily influenced, maybe even buffeted, by these broader economic and industry-specific storms. The picture is definitely one of a company navigating a turbulent environment effectively, but that environment itself is the primary challenge impacting the stock right now.
Okay, a final thought then for you, our listener, to consider. Given Delta's projected robust free cash flow, potentially exceeding that $4 billion mark in 2025, how might the company strategically use that significant capital if the economic picture does become clear later in the year? Does that potential deployment of capital, maybe paying down more debt faster, returning more cash to shareholders through dividends or buybacks, or perhaps even strategic investments, does that potential offset some of the current uncertainties that are weighing on the stock price today? Something to ponder as you watch for that next earnings report and look for signs of economic stabilization. Thank you again for sharing this material with us for this deep dive.